Fundsupermart.com.
Since the LionGlobal Asia High Dividend Equity Fund is a new fund, can you tell us more about the fund's investment strategy and how it will benefit investors?
Okay, in terms of the investment strategy, the fund will invest in a portfolio of low volatility stocks, which at the same time pay a high dividend yield. Now, the reason why we embark on this strategy is that market research has shown that a portfolio of low volatility stocks tend to outperform high volatility stocks on a longer time horizon. At the same time, market research has also shown that high dividend yield stocks outperform low dividend yield stocks on a longer time horizon as well. So we've actually put these two strategies together and created this product which invests in this high yield at the same time low volatility, which means that in the current environment where you have low interest rates and you also have highly volatile markets, this strategy should be interesting to investors who want to participate in appreciation of stock market in Asia, and at the same time benefit from dividend income, while at the same time when markets are falling, they will actually have less downside risk in that kind of environment.
Does the LionGlobal Asia High Dividend Equity Fund have a benchmark, and how much consideration is given to this benchmark in the fund's portfolio construction?
Yes, the portfolio's benchmark is the MSCI All Countries Asia Pacific ex-Japan benchmark. But what we've done is the benchmark, we've actually used a beta adjusted benchmark. And the reason for that is this portfolio having a lower volatility than the market. Currently the beta is 0.8. We have actually used a 0.8 adjustment factor to the benchmark so that we can do a like-for-like comparison. In terms of how we manage the portfolio, we use the benchmark and compare the portfolio and do a risk analysis to ensure that we are not taking too much active bets, say in terms of sector allocation or country allocation versus the benchmark.
Equity funds focusing on dividends have gotten rather popular in recent months. What makes the LionGlobal Asia High Dividend Equity Fund special?
The difference we think is that the portfolio that we have, because we focus on low volatility stocks, would actually give a different product to investors. Because most of the funds out there, they may be looking at high dividend stocks, but probably the beta of those stocks in the portfolio may be equal to the market or around the market, whereas we're actually looking at the low volatility part of the spectrum.
Based on the fund's focus on dividends, will the portfolio have a bias towards large cap mature companies?
If you look at companies which pay dividends, especially those which pay sustainable dividends, they tend to be large cap and they tend to be mature companies. In terms of how we select stocks, it's purely bottom-up approach, and we have in-house proprietary stock screening criteria where we look at the sustainability of the dividend yield, we look at the absolute dividend yield, we also look at the volatility of the stocks, and from there, from our bottom-up approach, we don't really have a bias towards large cap or mature companies. So if a company is able to have demonstrated that it's paid high dividend yield in the past, it can also be an investment opportunity for us.
What kind of investors is the LionGlobal Asia High Dividend Equity Fund suitable for?
This fund is suitable for investors who want to invest for the long term. It's also suitable for investors who want to participate in the growth of Asia, and at the same time they want to benefit from high dividends income, because this portfolio having such a high dividend yield, the compounding effect over the long term will enable this portfolio to generate both capital appreciation plus the dividend income.
Lastly, are there any investment themes the fund is looking to benefit from?
In terms of investment themes, this portfolio, because it's a bottom-up approach, we use bottom-up approach, we don't really look at investment themes in the short term. Rather, from the stocks that we have shortlisted and we populate the portfolio, we will then see whether there may be other opportunities, for instance, in, say, soft commodities where there's interest. If any of these stocks in our shortlist comes out through and is able to participate in this theme, we may actually invest in them. But arising from our screening, if it doesn't come out in our screening process, then of course it will not be in our portfolio.